Welcome. Welcome to the Consumer Financial Protection Bureau's public meeting of its Consumer Advisory Board at the CFPB's headquarters in Washington, D.C. The Consumer Financial Protection Bureau, or the CFPB, is an independent federal agency whose mission is to help consumer finance markets work by making rules more effective, by consistently and fairly enforcing those rules, and by empowering consumers to take more control over their economic lives. My name is Ixta Martinez. I am the Associate Director for the External Affairs Division at the CFPB. This is the Consumer Advisory Board's third public meeting of the year, and as always, we have a packed schedule. Today's public meeting is being recorded and will be available at consumerfinance.gov. You can also follow CFPB on Facebook and Twitter. Let me spend just a few minutes telling you about what you can expect at today's meeting. First, I'll introduce the Bureau's CAB members. For some of them, this will be their first public meeting with the CAB, and we are happy to welcome the new and returning members. Then the CFPB's Acting Deputy Director and General Counsel, Meredith Fuchs, will provide opening remarks. Following the Acting Deputy Director's remarks, the Board's Chair, Bill Bynum, will resume his duties conducting the meeting, and he will introduce Dubis Correal and Irene Siricki, subject matter experts in the Office of Financial Education, who will engage the CAB in a discussion about efforts to promote financial education and reach limited English-speaking consumers. After that discussion, at approximately 11:15 a.m., CAB members Patricia Garcia Duarte and Jim Van Dyke will discuss trends and themes in the field. Chair Bill Bynum will adjourn the public meeting at about 12:30 p.m. and then resume at 2 p.m. When the meeting resumes at 2 p.m., the CFPB's Director Richard Cordray will provide remarks about pre-dispute arbitration clauses in consumer financial contracts. The Bureau published proposals on the issue earlier this month. Following the Director's remarks, Will Wade Gary, Charlie Honig, Eric Goldberg, and Kelvin Chen, subject matter experts in the Bureau's Research, Markets, and Regulations Division, will engage the CAB in a discussion about the Bureau's SBREFA proposals. The public meeting will then adjourn at approximately 3:30 p.m. As many of you know, the Dodd-Frank Wall Street Reform and Consumer Protection Act, which created the CFPB, also provided for the establishment of the CFPB's Consumer Advisory Board to advise and consult with the CFPB in the exercise of its functions and to provide information on emerging practices in the consumer financial products or services industry, including regional trends, concerns, and other relevant information. Today's public meeting and discussion is in support of this statutory responsibility. As a reminder, the views of the CAB members or their views, they're greatly appreciated and welcome. However, they do not represent the views of the CFPB. So let's get started with introductions. The chair is Bill Bynum. Bill is the CEO of Hope Enterprise Corporation in Jackson, Mississippi. Seema Agnani is the Director of Policy and Civic Engagement at the National Coalition for Asian Pacific American Community Development in Washington, D.C. Sylvia Alvarez is the Executive Director at the Housing and Education Alliance in Tampa, Florida. Ann Medore is the Director of the Fair Financial Services Program at Texas Appleseed in Austin, Texas. Don Baylor is a Senior Associate at the Urban Institute in Washington, D.C. Tim Chen is the CEO of NerdWallet in San Francisco, California. Professor Kathleen Engel is a research professor at Suffolk University Law School in Boston, Massachusetts. Professor Judith Fox is a clinical professor of law at the University of Notre Dame in Notre Dame, Indiana. Patricia Garcia Duarte is the president and CEO of Trellis in Phoenix, Arizona. Julie Guggen is the executive director for the Minnesota Homeownership Center in St. Paul, Minnesota. Neil Hall is the executive vice president and head of retail banking at the PNC Financial Services Group in Pittsburgh, Pennsylvania. Dr. Raul Hinojosa Ojeda is an associate professor at UCLA's Division of Social Sciences in Los Angeles, California. Brian Hughes is the senior vice president and general manager of deposits for Discover Financial Services in Deerfield, Illinois. Christopher Kukla is the senior vice president at the Center for Responsible Lending in Durham, North Carolina. Max Levchen is the co-founder and CEO of a firm in San Francisco, California. Brian Long is the CEO at Wolters Kluwer Financial and Compliance Services in Minneapolis, Minnesota. Jim McCarthy is the president and CEO of the Miami Valley Fair Housing Center in Dayton, Ohio. Joanne Needleman is senior counsel at Clark Hill's Consumer Financial Services Regulatory and Compliance Group in Philadelphia, Pennsylvania. Patrick O'Shaughnessy is the president and CEO of Advance America in Spartanburg, South Carolina. The Honorable Annette Rizzo is a retired judge now working with the Judicial Arbitration Mediation Services in Philadelphia, Pennsylvania. Phaedra Robinson is the executive director at the Coalition for a Prosperous Mississippi in Richland, Mississippi. Ellen Seidman is a senior fellow at the Urban Institute in Washington, D.C., and a visiting scholar in the Community Development Department at the Federal Reserve Bank of San Francisco. Jean Spencer is the senior vice president for stakeholder engagement, policy, and research for the Homeownership Preservation Foundation in Washington, D.C. Jim Van Dyke is the founder and CEO of Javelin Strategy and Research, a division of Greenwich Associates in Pleasanton, California. And Josh Zinner is co-director at the New Economy Project in New York, New York. We also have with us Matt Cameron, senior advisor for the Bureau's Consumer Advisory Board and Councils. I am now pleased to introduce Meredith Fuchs. Meredith Fuchs serves as the acting deputy director and the general counsel for the CFPB. Previously, she was the CFPB's chief of staff after serving as the principal deputy general counsel for the CFPB. Acting Deputy Director Fuchs came to the CFPB from the U.S. House of Representatives, where she served as chief investigative counsel for the Committee on Energy and Commerce. Previous to that, she served as Vice President and General Counsel at the National Security Archive at George Washington University. Acting Deputy Director Fuchs was a former litigator, partner in private practice, and also served as an officer on the D.C. Bar Board of Governors. Acting Deputy Director Fuchs, the floor is yours.
Thank you, Zixta. Good morning. My name is Meredith Fuchs. As Zixta mentioned, I am the Acting Deputy Director and the General Counsel of the Consumer Financial Protection Bureau. I'd like to welcome you all to this meeting of the Consumer Advisory Board, which has been convened to talk about, among other things, the challenges of reaching limited English consumers and about arbitration. I particularly want to extend a very warm welcome to the new members of the CAB, who are here today with us for the first time after being sworn in yesterday by Director Cordray. When we appoint new members to the CAB, the CFPB seeks to gather unique insight from experts all around the country. And we're extremely grateful for all of you agreeing to be part of this important advisory body. You add tremendous value to the work that we do, and we look forward to continuing to learn from you and getting your advice while you serve on the CAB. In January 2013, the CFPB created a language access task force comprised of an internal cross-divisional working group aimed at developing and executing a bureau-wide strategy to provide limited English proficient, LEP, consumers with meaningful access to information produced by the CFPB. The task force works to identify and address barriers to language access, coordinates with internal and external stakeholders, and informs our work to engage LEP consumers. As part of our outreach to LEP consumers, the Bureau offers free, multilingual financial education materials and resources. And at today's meeting, the CAB will be joined by experts from our Office of Financial Education who'll provide an overview of these tools, the ones the CFPB has developed, some of which include glossaries of common financial terms that are used to translate consumer education materials from English to Spanish and to Chinese, and a set of guides to help new Americans become familiar with U.S. financial products and services. I'm looking forward to hearing from you about your experiences working with new Americans and LEP consumers, and discussing some of the challenges and opportunities for providing financial education to this community. Later this afternoon, as Zixta mentioned, you will be joined by Director Cordray and by CFPB subject matter experts from across the CFPB to discuss a very important topic, arbitration. Earlier this month, the Bureau launched a rulemaking process to better protect consumers when it comes to arbitration clauses, or more specifically, mandatory pre-dispute arbitration clauses that exist in consumer contracts. These clauses are often buried in fine print of many contracts for consumer financial products and services, such as credit cards and bank accounts, and companies use them in particular to prevent class action lawsuits from being brought. The central idea of the proposals that the CFPB is considering is to restore to consumers the rights that most of them do not even realize were taken away from them. And that process is beginning now, and we're happy to talk to you about it today. I know the director is looking forward to joining you this afternoon for that discussion, and I'm delighted to be here with you this morning. Thank you. Bill, I'll turn it over to you.
Thank you, Deputy Director Fuchs. Thank you, Zixta. Good morning, and welcome to the third meeting of 2015 of the Consumer Advisory Board. I'd like to thank members of the public for being here with us today, and I'd also like to join Meredith and Zixta in welcoming our new advisory board members. It's already very clear from our interaction over the past day or so that there is an incredible wealth of expertise in a range of subjects, a lot of diverse opinions that will add value to the work. Know that we all take very seriously our commitment to provide advice to the Bureau, and look forward to working with all of you as we do that over the coming years. The first half of our meeting, as you've heard, will focus on reaching limited English-speaking consumers, a very important topic in a country that's becoming more diverse every day. And I'm very much looking forward to hearing from our experts from your Bureau today. We will hear from Dubice Corial, a Strategic Partnerships and Outreach Coordinator, as well as Irene Saricki, a Strategic Partnerships and Outreach Coordinator with the Bureau's Office of Financial Education. After we hear from them, then we will open up for discussion among the CAB to get their perspectives on these issues. And as always, I anticipate that there will be a very active and engaging and helpful discussion. But for now, look forward to hearing from Dubice and Irene. Please begin.
Thank you very much. Of course. Good morning, everyone. Thank you to CAB members for being here. And as it was mentioned before, we do appreciate your expertise. So we hope that this is sort of like an open discussion. As they said, my name is Dubice Corial, and I'm with the Office of Financial Education, which is within the Consumer Education and Engagement Division. And what I'm going to do is sort of provide you an overview of what the division does, and also provide you an overview of our financial education tools targeted to LEP consumers. And my colleague Irene is going to talk to you a little bit more about the research that we have done in the context of LEP consumers. So we would love to hear from you as well. My presentation is there. Is it Am I doing it correctly? Oh, yeah, some things work the proper way, right? As I indicated, this is our agenda for today, and please feel free to ask any questions at any time. We would really love to hear from you. So in terms of our Consumer Education and Engagement Division, some of you heard from our Associate Director, Gail Hillebrand, in the past few days, and so I'll provide just a brief overview. The division is divided in 6 offices. 4 offices are targeted to specific populations, and 2 offices, the Office of Consumer Engagement and Financial Education, sort of cut across all populations. So I'll give you a brief overview of each one of them. The Office for Students focuses on student lending, making sure that students across the country understand the costs and risks of student loans, but also that they understand the benefits. The Office for Older Americans focus on people 62 and older, and their goal is to empower, educate, and protect older Americans from scams and financial exploitation. The Office for Service Member Affairs focus on military personnel, so they're making sure that they're getting critical information at critical points in their lives. And the Office for Financial Empowerment focuses on low-income communities and vulnerable populations. The other 2 offices, as I mentioned, the Office of Consumer Engagement sort of cut across all the audiences, and they are our link to consumers because they manage our website. They create all of our digital properties, and we're very proud to say that our website is in plain language, very easy to understand, and we always get congratulated from people because we don't speak like government. We really speak to consumers in a way that they understand, so they appreciate that. And the Office of Financial Education is the office that I'm in, and we sort of have 3 main functions. The first one is to support channels for delivering financial education. So support those financial education providers by offering tools, unbiased tools, and also research. The second one is encouraging consumers to ask, plan, and act. And we do that by creating tools that will help them make better financial decisions. And the third one is conducting foundational research to help improve the impact of financial education and identify elements of effective practices. And Irene will talk to you a little bit more about that. In terms of our language access initiatives, as it was mentioned, we created the Language Access Task Force in January of 2013, and this is consistent with Executive Order 13166, which is improving access to services for persons with limited English proficiency. It was issued in August of 2000, and the Bureau is sort of been consistent with that executive order. According to, and most of you probably know about these numbers, but I'd like to give you sort of a little bit of a statistics about the populations that we're trying to reach. According to the census, the 2010 census, there are about 24 million people in the country that do not speak English. Latinos represent about 17% of the population, and Asian American and Pacific Islanders now represent the fastest growing population in the country. The FDIC National Survey of Unbanked and Underbanked Household found that households that include a foreign-born non-citizen or where Spanish is the only language spoken at home are less likely to participate in the financial mainstream banking system. Household members who speak Spanish as a second language or cannot read English are particularly disadvantaged in their ability to review and understand financial documents and other important notifications. So receiving materials in their native languages is important for them to be able to make informed financial decisions. The Federal Trade Commission also noted that populations who do not speak English are also targeted for scams and more susceptible to fraud. And the GAO indicated that lack of proficiency in English can also create significant barriers to financial literacy and just to conduct an everyday financial affairs. So for that reason, we did created the Language Access Task Force, which is an internal cross-divisional working group that coordinates strategies and also look at ways as to how we can serve this population better. The task force also coordinated the development of our language access plan, which was posted in October of 2014. It was posted from October 2014 to January of 2015, and we received many comments from different groups. And really what we wanted to get feedback on when we posted our language access plan was how do we explain consumer protections to LEP communities in a more effective way? How do we provide better access to our complaint system? How do we communicate supervision and enforcement actions to these populations? How do we distribute information and sort of get it to their hands? Because we learned that we're here in Washington, D.C., but you guys are out there working with this population. So how can we make sure that they get this kind of information? And also, how do we use online communities to reach them? And of course, how do we work through community organizations? So those were the areas where we requested comments, and we got comments about improving our outreach strategies to LEP, gathering data about linguistic needs and preferences of consumers, hiring multilingual staff, improving HMDA data collection about race and ethnicity. And so those were some of the comments that we got from the public, and we used those as we develop our policies. In the plan, we indicated that we will review it every 3 years, and we make changes as necessary. So I'm going to now go into our financial education tools. And please stop me if you have any questions or like to add a comment. We are launching today. We're very proud of launching our newcomers guides to managing money. We launched the English and Spanish in early this summer, and we're launching today the Chinese. So what I'm going to do is just pass. There are 4 guides, and I made packages by language, so you just take 4, one of each. And throughout the United States, as was mentioned, consumers are making more and more complicated decisions and choosing among many different products. And it is very hard for even people who speak English. So imagine for someone who do not speak the language. So that's why we developed this newcomer guides. They will also be available in other languages. So we have 4 guides. One is Ways to Receive Your Money, and it provides information about options for receiving wages or payments. And consumers can use this guide to compare the benefits and risks of getting paid in cash, with a check, by direct deposit, or a card. So really what we're doing is providing basic information on how they can compare different products. And we have also heard from a lot of nonprofits that this is not only good for new Americans, but it's also good for people who are new to the financial system. The second one is Checklist for Opening an Account. This guide helps new Americans who are interested in opening a bank or credit union account, and it also helps to find out what is the required paperwork to open an account. The third one is Ways to Pay Your Bills. This guide provides information about options for paying bills. Consumers can use this guide to compare the benefits and risk of paying by check or money order, by direct deposit, online, or in cash. And the fourth one is Selecting Financial Products and Services. This guide provides information about common transactions, including ATM cash withdrawals and debit card purchases, which for many new Americans, this is new to them because their financial system in their countries is different. So you can download these guides from our website. You can post them. You can order them in bulk for free. So we encourage you to do that and share with your networks. The other tool that we're launching today is a glossary of financial terms. We did it internally because we wanted to make sure that every time we translated a document, we we were consistent in how we use certain financial terms. So we created it, and now we're launching it publicly because we feel that this is going to help financial education providers who are working with new Americans. We are launching today our glossary of financial terms in Spanish and Chinese. I didn't print copies of that. We don't want you to go back to like too many papers, but it's going to be, so you know we're thinking about you. This is going to be posted on our website. So one is the CFPB Glossary of English Chinese Financial Terms. I'm an LEP myself, as you can tell. And CFPB's Glossary of English Spanish Financial Terms. So they will be posted on our website, and I'm pretty sure that through Matt, you're going to get the links to where they're posted. And just want you to know that this is a living document. So we had have a lot of terms, but we hope to continue updating it. We have translated our divisions, so we use that consistently. The name of the divisions, name of legislations, frequent reference organizations. And so that's all in here, from English to Spanish and from English to Chinese. The other tools that we have, which we have had for some time now, we have a series of free financial education materials. We have brochures, bookmarks, fact sheets, flyers. We have them in several languages. We up to 7 languages, most of them. We also have, within the multilingual materials, we have information for older Americans. For example, we have the Money Smart for Older Americans, which is Money Smart para Adultos Mayores. It's an educational program to prevent elder financial exploitation. We also have Managing Someone Else's Money, and maybe I'll just pass this around. So we have it also in English and Spanish, and this is to raise awareness among elder adults and their caregivers on how to prevent elder financial exploitation. And he also encourages advanced planning and informed financial decision making. We do have our Spanish website, and from the website we have links to 8 languages. And in those pages, we have information about the Bureau, information about our remittances campaign, and our goal is to build those pages as well. In terms of our CFPB contact centers, as you may know, our consumer response takes complaints in more than 180 languages. But when people call, there is a direct selection for 9 languages. So it says press 1 for Spanish, press 2 for Chinese, and so on. We also conducted an education campaign about our remittances rule, which was the first rule that the Bureau issued in 2013. And we did the campaign from October of 2013 through January of 2011, and this was to make sure that consumers who send money home, and the audience, even the remittances consumers, include people who pay college abroad or families of military personnel and those paying bills for mortgages. We focus on the highest volume, and we focus on 5 languages. We focus on Spanish, Haitian Creole, Vietnamese, Mandarin, and Tagalog. So we created materials for this campaign, and we also work with key stakeholders in those communities. We had a very active online campaign. And the campaign was so successful that we replicated parts of the campaign in May of 2014 and in September of 2014. In May, because Mother's Day is one of the days where the volume of remittances go up, and September because back to school is also a time where the volume goes up. We also replicated that concept with the mortgage rule, in which we created information in up to 7 languages. I'm going to show you just a couple of images about the guides who you're getting today. And then this is our website in Spanish. An example of one of our remittances brochure. And we actually got comments from and probably many of you and many other nonprofits and other organizations telling us that the information was so clear and it was provided in a way that it was very easy to understand. We also have Your Money, Your Goals, which is a toolkit targeted to social workers. And it provides information. It's sort of divided by modules, and it provides information on money, credit, and debt, and is targeted to social workers. We also have versions for workers, volunteers, and legal aid. In the Your Money, Your Goals, the core toolkit is also available in Spanish. And all the information that I'm referring to is posted on our website. This is just a copy of our list of publications. We have also publications on tips for manager checking accounts, information about the Bureau, tips for managing money, resources on avoiding foreclosure. So we have many, many topics in many, many languages. And now, and this is sort of like the page for the other languages. Now I'd like to turn it over to my colleague Irene, who is going to talk to you about a field scan that we commissioned to learn about effective practices and approaches targeting LEP consumers. Irene?
Thank you very much, Dubis. Do you want to keep the clicker and I'll just either that or toss it? Okay, it's coming in my direction. That's good. Great. Well, thank you very much, Dubis, and thanks to everyone for being here, both from the public and the CAB. Thanks to Matt for delivering the clicker to me. So all of the great work that Dubis just described to you is for the most part efforts in which the Bureau is providing financial education materials directly to consumers or via intermediaries. But here in the Office of Financial Education, we are also interested in helping to support the field of financial education. There's thousands of organizations and individuals across the country who are already providing really important financial education services to consumers, and we want to work with all of them and build their capacity to help consumers achieve their own financial goals. And we also want to learn from those financial education providers about what lessons they're learning, about what works in helping consumers. So we want to both share our materials and also learn back from everyone and help to build their capacity. And so as part of that effort to work with the field, we've undertaken a field scan of programs and practices that financial educators are using to help new Americans and LEP consumers. And before I speak about that, I just want to put it in the broader context of the Office of Financial Education's research work. As part of meeting our goal of empowering consumers to take more control of their financial lives, we engage in research to better understand consumer decision-making and effective financial education practices. And then we use that research to inform our own work in financial education here at the Bureau, and then, again, share those findings widely with the financial education field so that everyone can benefit from that research. And just to give you a sense of some of our previous research efforts, just in 2015, we've released publications on topics such as defining financial well-being for consumers, consumer perceptions and experiences on credit reports and scores. We actually presented that work here at the CAB in February. The effectiveness of financial coaching, as a strategy to help consumers, financial wellness in the workplace, and others. And so this work on financial education for new Americans is that we're going to talk about today is part of that broader effort to inform financial educators with the newest research on effective practices. So with that, I'll turn to the topic for today, which is our field scan on financial education for new Americans and LEP consumers. Our objectives in doing this study were to identify and understand the challenges in building financial capability that are faced by new Americans and LEP individuals, and also to identify promising financial education strategies that are designed to help new Americans and LEP individuals. To meet that objective, these objectives, we commissioned a study that did three things. We reviewed the research literature on new Americans' financial capability and engagement with the financial services system. We interviewed external stakeholders with expertise in approaches used to serve new American consumers and LEP consumers. And we also identified financial education providers and programs and service providers that have developed promising strategies, so again, so we could learn what they were learning. And with that, I will just do a quick overview of the findings. Whoop, it worked. I do want to note that as part of this work, we reviewed previous research by many other institutions and organizations, including the FDIC and the GAO, academics, consumer groups, and many others. And our findings, I think, really build on and reinforce what they found, and we commend the work done in this field by these and by many other stakeholders, including some of the folks, I think, at this table. In the field scan, we found generally 3 types of challenges faced by new Americans and LEP consumers. First were those caused primarily by socioeconomic status and shared with folks who were not new Americans and LEP consumers. We found some challenges unique to new Americans because of their status as being new to the country, and then challenges associated with being limited English proficient, as Dubis was talking about earlier. Before I say more about those, I just want to note that new Americans and LEP consumers come from widely varying backgrounds. They have widely varying experiences and thus have varying financial education needs. The experience of each person or community will be unique, and so the broad themes and programs we talk about today may not be relevant or applicable to everyone, but we want to share the range of things that we heard. So I'll just mention a few of the things we found in the socioeconomic status area. Some new Americans start off with limited resources, and thus they may share challenges with other groups who struggle financially. Again, this doesn't apply to everyone, but in some cases there's overlap, and so we wanted to pull those out and be clear that they're things that, again, they are sharing with other groups. One are challenges related to accessing financial services. For people with few resources or uneven income, in some cases, products from mainstream financial institutions may be or may be perceived to be more expensive, and those consumers may choose to use cash or alternative financial services instead. A second challenge that we see in a number of communities is being what we call credit invisible. Credit invisible refers to consumers who have limited information in their credit file or no information, and thus do not have a credit file or, in some cases, a credit score. And this clearly is a factor in having, of course, limited access to credit, and in some cases also access to housing and employment. The Bureau did a research report on this a few months ago, and we found that low-income communities were much more likely to be credit invisible or unscorable or unscored compared to higher-income communities. And similarly, higher percentage of Hispanics are credit invisible compared to white consumers. Again, that's not a complete categorization of all new Americans, but it does show the parallels in terms of likelihood of being credit invisible. The second broad category are challenges unique to new Americans as a function of their being new to the country. The first is there's a set of issues around documentation and identification requirements. There is variation in what type of documentation that is accepted by financial institutions as part of the Know Your Customer requirements. Some, but not all, financial institutions may accept foreign passports, consular IDs, or other alternative forms of identification. Others may not. And so new Americans may face challenges in navigating the documentation and ID issues needed to access certain financial products and services. Secondly, and this came up in some of the things that Dubis said, new Americans may be unfamiliar with financial products or services in the U.S. Some of those products may not have a corollary in their home countries, and so they may struggle at times to navigate those products and services. And then lastly, again, Dubis mentioned this, there's challenges around scams, deceptive practices, lack of trust. New American households may not trust financial institutions due to prior experiences with financial institutions in their countries of origin, or they may fall victim to scams and deceptive practices here, which again is an issue in terms of accessing the type of services they may need to become financially capable. So those are things related to new Americans. The last kind of bucket of challenges that we identified were related, again, and this is what Dubis covered very well, specifically to limited English proficient consumers, which may not completely overlap, of course, with the other categories. Certainly with limited English skills, there's obstacles to understanding and accessing financial products and services. There may be confusion about technical terms because there may not be equivalent terms in some languages. Things like balloon payments, there may not be a term in other languages to effectively capture that. And in some cases, translations. Yes, yeah. I don't know how that translates, but I have a suspicion it may be complicated. And that's exactly why we created the glossaries, to help begin to create some shared understanding of what those terms may be. And then lastly, limited English status consumers may have trouble finding places that can serve them, either financial institutions and or financial educators, for example. There may not be bilingual employees, or bilingual employees may not be familiar with the products and services. And so those are challenges associated with being limited English proficient. Then we also looked at some of the challenges facing financial educators in serving new Americans, and then also promising practices, but I'll first speak to the challenges facing financial educators. So for financial educators who are having new Americans and LEP consumers come to their doors and want to provide good service to them and help them, they may have challenges at times in reaching the target population. For many new Americans, family and friends serve as the primary source of information about financial products and services. Probably for all of us, that may be a primary source. And they may be cautious about accepting offers of help from outside their circles. Secondly, there can be issues around ensuring accessibility. Many new Americans work long and non-standard hours, and thus access to flexible childcare or transportation, as well as financial education programs that are tailored to those types of schedules are important, and may be a challenge for financial education providers to make sure that those things are available. Another issue, of course, is adapting available materials. That's an issue of language accessibility. It may be hard to find financial education materials, especially translated into some of the less common languages. And again, we've tried to address some of that in our materials, but that is not an infrequent challenge. And then lastly, for financial educators, finding staff who are bilingual and bicultural to do the instruction and the financial counseling and other service provision can be difficult. So after looking at that range of challenges, very daunting, we also wanted to see what promising financial education practices are already being tried for to help new Americans and LEP consumers. And we found a really wide range of great ideas and strategies around the country to address those challenges. I'm going to mention just a few types of programs, but I'm not going to say too much because I really want to hear from the CAB members who may know of additional ideas, strategies, programs that we should reach out and talk to as we kind of finalize this study. So we found a set of programs around outreach and awareness campaigns designed to help new Americans learn about the financial system, learn how to navigate it, and how to avoid pitfalls. We also saw a range of financial education materials that were culturally appropriate and in some cases in multiple languages, available on different topics through different providers. We saw some examples of programs based in schools to help children in new American families to overcome financial isolation and become integrated into the financial system. We learned about programs to incorporate financial education into services provided as part of refugee resettlement program for refugees. And there's been a lot of work done in that area. And there's many other examples of types of financial education programs that are available. And then lastly, we also included in our field scan looking at financial products and services tailored to help new Americans and LEP consumers. We do make a distinction, of course, between financial education and financial products, but these tailored products were often combined with financial education, and they can be an important part of a strategy to help build financial capability for new Americans. So just a few examples. I mean, certainly remittances are an important product, as Dubis mentioned in her presentation. We also learned about tailored strategies such as lending circles. Lending circles are social loan programs that are based on traditional practices of informal group lending found in a number of countries around the world. And in these programs, consumers typically receive some financial education and then are placed in groups where each person makes a monthly contribution and then on a rotating basis will receive a loan from that lending circle. And it's a mechanism for individuals to both access capital and build or improve credit. I believe a former CAB member was very active in that field, was a leader in that field. Also, we saw a number related to kind of building and improving credit. We saw a number of credit building loans that are out there that can help new Americans who have limited or no credit histories some of those credit invisible issues we mentioned earlier to improve their credit. And then certainly there's a lot of small business services, which is kind of can be both a product as well as a financial education strategy to help immigrants, to help new Americans who are interested in becoming entrepreneurs. So we know there are many other examples of tailored products out there. And again, we'd love to hear the ideas of CAB members on this when we turn to the discussion part, which is basically where we are. Our next steps at the Bureau is to really take what we've learned about the challenges facing new Americans and LEP consumers, and also what we've learned about promising practices and programs that financial educators have used, and use all of that as a resource to share with the field as well as to inform our own work. So we're planning to finalize and release the field scan findings I just described at a very high level to serve as a resource for community-based financial educators and other interested stakeholders, and raise the visibility of this type of work. We plan to disseminate the newcomers' guides to managing money, the ones that have, I think, made it all the way around. I see them in different settings here. And also to disseminate the new glossary of terms that's being released, and then to expand some of our other work around Your Money, Your Goals and other public-facing CFPB resources to reach more new Americans and LEP consumers going forward. So with that, I will turn the mic back to our chairman for discussion, and we would love to hear what everyone has to say.
Thank you, Irene Dubus. It's very impressive, important work. I continue to be just blown away by the breadth of the work that the Bureau does, particularly financial education, which I think is one of the less known aspects of the Bureau's work. But I would like to open this up now for discussion among the CAB. Just how does this resonate with you, some of the information that's been shared, and I'd like to hear from you about how you're seeing some of these challenges play out in the communities where you live and work. Yes, Joanne.
I just had a quick question. Are you working at all with the FTC? Because we were involved about almost a year ago in Long Beach. There was a field hearing on LEP, communicating with LEP in the debt collection space, but I know that there has been work that the FTC has done. I'm just wondering whether you're partnering with them on some of those projects.
Yes, we do. We do work with the FDIC and other federal agencies. The Bureau is the vice chair of the Financial Literacy and Education Commission, which is composed of 22 federal agencies, and FDIC is one of the members. So we do collaborate on many other projects in this with other federal agencies as well. And we are aware that they have also the consumidor.gov, which is a really good website. And yeah, so we did work jointly on that roundtable about debt collection.
I just want to commend you on this excellent work. It's really exciting to see these materials being created in a uniform way and made accessible and distributed. I do have some thoughts about additional ways to build them out based on issues. Our organization's done a lot of work with new Americans and surveyed a lot of communities. On the account side, one of the big issues for individuals is sometimes people will open an account. It's not always accessing the account, and then they have a bad experience and they turn away and they close their account. Usually it's unexpected overdraft fees. And so maybe some guidance not just on how to open an account, but how to successfully manage it for people who are new to having an account. And it also brought to mind the Safe Accounts program with the FDIC, maybe tips on what to, like, if this is your first account or if you think you don't have enough money to maintain an account, these are some features that you should look for that will make an account give you higher likelihood of being successful. And maybe it can be, tied into the FDIC Safe Accounts pilot if that's a product that has become more available in the marketplace, but just more specific suggestions. And then there was a lot of talk around building credit. And I think we've had presentations before the CAB on the importance of a credit score, credit invisibility. And so maybe and this would be probably more broadly applicable than just these communities, but how do you build credit? Because there's a lot of mystery around that, and a lot of people get sucked into financial products that don't build credit, but they think they're building credit. And people don't know that if you have a loan out for 6 months, that's not going to help you. You need to have a loan out for 18 months or 2 years, or, because we've had a lot of conversation about the mystery around how do you build credit. But for new immigrant communities, it's a very important, for everybody it's important, but for communities, and in a sense there's an opportunity because people come here and they don't have bad credit. so you don't have to dig out of a hole, but how do you leverage that opportunity to move forward rather than having people fall into the hole and then have to build up. So I think that would be a great supplement. And then I really like the focus on fraud and scams. That's a very big issue. And in Texas, we've particularly seen it around home ownership. There are people who will sell condemned properties to individuals, and they will buy them and fix them up, and then the city comes in and it's a condemned property. They didn't own it to begin with. But so it might be interesting as you build this out to talk about, if you want to buy a home, what to look for, what's legitimate credit and what's questionable credit. This isn't across all states, but in Texas we have a lot of contract for deed, and that gets a lot of families into trouble. They may not know the rights that they have, and that brings me to a final thought, which is on rights, because in many countries people don't necessarily have the same rights that they do here. And so if you have a bad experience with a financial service provider, oh well. But people aren't used, I think that in other cultures or countries people aren't used to the mechanisms and the systems that we have if things go wrong. And I like that each of these brochures have information about how to complain. But and I know you have your brochure about complaining as well, in Spanish and in English. But just about people's rights, just to have a sense that they have more rights than maybe they think they have.
Great points. Thanks. I saw Julie, Sylvia, Josh, Max, Seema, Jim.
Thank you for this excellent work. I think you've really captured what those of us in the field are seeing in terms of challenges and some of the opportunities. Just some examples of additional successful partnerships that we've been involved in Minnesota, and perhaps helping you think about ways to get this information out. We partner with the designated refugee and resettlement organizations in Minnesota on basic financial literacy and getting banked issues. We were able to secure some funding from the USDA to create a financial literacy program in rural Minnesota in partnership with one of the nonprofit organizations there who was seeing a tremendous need within the Hmong population as well as within the Native American population in Minnesota. So just two other ideas about how you might be able to get the word out. And then I also sort of consistent with what Anne was saying, I think we can't underestimate the prevalence of different cultural values and mores around money, dealing with financial institutions, and the impact that family and faith have on how people perceive money and being banked. So just some thoughts there.
Thank you. Sylvia.
Thank you, Bill. First of all, I wanted to echo some of what Anne had said, and thanking you both for everything that you've done as far as financial education. Your scan is spot on. When people come from a Spanish-speaking country, there's usually distrust of banks. They don't understand our system. It's completely foreign to them. They prefer to use what we call mattress money, or put their money in a jar and bury it in the ground, because that's what they were doing back home. So a lot of the countries that they come from, they don't have any kind of a credit system per se. And like I said, the distrust of banks. So what we have seen in our agency, first of all, we do provide education. Our financial literacy classes teach people all about check writing and also loans and how to apply for them. And then, of course, we teach homebuyer education classes in person and now online as well. and it's not in Spanish yet, but we're working on translating it. And the agency that I work at is a HUD-approved agency. We all of our services are provided in both English and Spanish, and what we observed in our analysis and our studies during the financial crisis is that most of the wrong that was done to people of color and minorities was done from their own people. Hispanics, if you speak their language, all of a sudden there's a bond. And it was that bond which caused so many of the Hispanic population to actually go into foreclosure, which, you know, coming to this country, it's the American dream to own your own home. And to lose that home was a big tragedy to a lot of these families. So the tools that you've created are extremely useful. But I would like to offer a suggestion, because the big problem is you can have all the tools, but if it doesn't get into the hands of the people who need them, then they're not of any value. So have you considered perhaps partnering with immigration, partnering with language-specific Chamber of Commerces and organizations, and letting them know, first of all, that people can come to a HUD agency for little or no cost and get the guidance that they need. We are an uninterested third party in these transactions, and we're there to help and to guide. So I think that, and I really appreciate the fact that the CFPB is promoting HUD housing, or at least, you know, supporting HUD housing counseling agencies, but even more needs to be done, because a lot of the issues that Ann brought up are issues that we help these people avoid.
Yeah, again, I want to commend you on these materials. That it's really impressive, and your ongoing efforts to get information out in a variety of languages for people. I just wanted to highlight one of the challenges that we're seeing that you talked about. There are real barriers to mainstream banking for immigrants, and particularly for undocumented immigrants, and it's not just cultural, it's also systemic, and one of them is around IDs. And in New York City, we recently passed a law to create a municipal identification, and it has very robust protections in line with most state driver's licenses. In fact, its protections are stronger than some state driver's licenses. And there were a number of rationales for this, but important rationales amongst them to ensure that when people are stopped by the police without an ID, that they're not hauled into the police station for no reason. But one of the fundamental reasons was to get more people into the banking system so that people weren't pushed into high-cost financial services. And the regulators issued an interagency letter saying that the New York City municipal ID had strong protections and could be a primary form of identification under bank customer identification programs. Despite this, we've seen that the big banks, in particular community development credit unions, are accepting this form of ID. Amalgamated Bank has, but the big banks, and specifically Chase and Citi and Bank of America, are not accepting this as a primary form of identification. These are banks that we've talked to about this. I don't mean to single them out, except that we've had conversations, and they specifically are not accepting the New York City ID as a primary form of identification. And to us, this is very troubling, because there is a letter from regulators saying that this is acceptable, and we don't know the rationale for this, and we don't understand the rationale, but it's a real problem. And municipal IDs, there's a movement to create these in municipalities around the country. And it's a very important movement. And again, if this isn't addressed, identification is going to continue to be a fundamental barrier to people, and particularly undocumented immigrants, in getting bank accounts. So just to flag that is a particular challenge we're facing in New York, and I think that's going to be an issue everywhere. And to the extent that the CFPB can be involved in moving that dialogue along, I think it's really critical.
Thank you. Got Seema, Max, Raul, and Brian.
Thank you. So, yes, I can't begin without again, congratulating CFPB. It's really having done financial education in immigrant communities for a long time. It's so refreshing to see materials that are actually digestible, and so keeping it simple, even in its English form, I think is a really important start. And I also I'm really happy to see the financial terms that you're creating and translating. I hope that you can keep going with the languages. I know that resources are limited, but I think that that's going to be a really important effort that you've done, and hopefully we can encourage the financial industry to also adapt some of it, and other federal agencies, because this has been a real issue for us. So one thing I wanted to point out is, I'm glad that you did the research and looked at the socioeconomic factors as well, because I think, at my organization, we always talk about new immigrants facing both cultural and linguistic isolation. So even if they're English speaking, very often, just culturally, these communities are isolated. So some examples are the Caribbean and African communities in New York City, where I've been working. Even though many are English speaking, they still face a lot of the same challenges that those with limited English proficiency do. And then the other issue is that literacy rates in their home languages, I'm sure this emerged in your research as well, are often vary. And so I say all this because the print materials are a good start, but there's a lot to come in terms of actually making sure the information gets out. So some of the things I wanted to, so for this reason, really partnering with groups on the ground is, I think, the most effective way to get information out. Whether it's community-based organizations, the libraries, community colleges, I think there are, I know not every place has the number of organizations that a place like New York City has. But I think, because those institutions are committed to education, and really do take the extra steps normally to translate, they're often good venues for this type of broad-based education. Also, translating some of this into curriculum, I think, will be helpful for the community-based organizations. And obviously partnering with the ethnic media is also a great way to reach these communities. So I guess, for me, working with local municipalities and community-based organizations is really the most effective way. My organization in New York, we partnered with 3 or 4 other groups to implement a program for HUD that targeted limited English proficient communities, and we were able to reach, communities in about 7 different languages, because we built this coalition. We produced the materials in that case, and HUD approved them. So, however that portion of it is implemented, I think that worked really well, because oftentimes translations don't necessarily take into account local communities, because languages change depending on what part of the country you're in. Another example I'll share is just in the court systems in New York. I've been personally witnessed situations where a translator was provided. They were quote unquote Asian, but were from an entirely different Asian country, and really were not helpful. And maybe that's relevant to the next conversation around arbitration. But just to again emphasize that the groups on the ground are really able to help get this information out. And small businesses. I know the CFPB has a lot of plans around small business in the coming years, and I would encourage you to think about opportunities to take advantage of that.
Thank you. Max?
Thank you for the work you do and you've done. I'll keep it brief, just a couple of practical suggestions. So one personal experience I had as a zero-generation immigrant, I think is very common. I came to the U.S. at 16, went to high school. It was moderately fluent in English, but very quickly became the strongest English speaker in my family and rapidly became the translator of all things financial and contractual to my parents. The one thing that was sorely missing in my public high school education in Chicago, there was no class in financial literacy for children to give to parents, or at least for me. And so at the ripe age of 40, I finally believe I can translate my mom's mortgage documents, but it would have been a lot better, call it 20 years ago when she got not the best mortgage ever. So I think introducing this at the middle school and high school curricula would be very powerful. There's a Department of Education that will probably be willing to do that. The other place that's similar that I don't think I heard mentioned, where contracts and financial arrangements take place very often, is at the workplace. So as both of my parents looked for work, they showed up with these long-ish documents or things like rent, but work is the place where the employer is motivated to deliver at least some basic literacy. And so if you make it available, it's another sort of a push versus pull type change that could happen. And finally, the one thing that I think is becoming more and more true, the decision-making, especially in contractual situations, is expected to be a lot quicker than people have access to information. Opportunities pass you by, and you feel pressured into opening an account because the rate will change or something will happen. And I think that actually creates a great opportunity for a startup in my universe in Silicon Valley. I urge you to, and I know you have Project Catalyst, and this sort of shows up in my neck of the woods quite often, but I would love for you to bring these materials in electronic form and essentially make it available. The obvious service to envision is a text interface where a person could literally text a phrase in English and receive a text back in a requested language explaining what the words self-amortizing mortgage actually means.
In English?
In their language.
Thank you, Raul.
Yes, thank you. And obviously, I think that this type of work really proves the necessity of the consumer financial protection agency. So, to the sense that we're redirecting the attention to the consumer's experience itself. So, I just wanted to make three quick comments about that. I mean, from the point of view of people we've been interacting for many years, from immigrants, they have a number of questions, right? And that there's sort of a hierarchy of ways and questions. And I think that a lot of it is here, but there's still a bit of a confusion. For example, a lot of people are going to come from their point of view of their immigrant status and their access to different types of documents. So what options they will have in terms of selecting financial service and products may be related to that. So some way, I'm thinking also from a technology point of view, how we can start structuring some of this information from a decision tree point of view of how somebody navigates ways that they can. Because, for example, one thing that still is confusing to a lot of people is this question about Social Security number. Do you need a Social Security number to open up a bank account? The answer is no, according to U.S. law, right? But most institutions we're still continue to do this work will say, no, you have to have a Social Security number. Well, so not only I think there's confusion on the consumer navigating this, I think there's a lot of confusion on the financial institutions, or maybe willful ignorance. So that might be something that something that can be addressed, so that we really start clarifying how to identify the real limitations and access potentials, both from the consumer as from the financial point of view. The other thing that I would second point is that we're already rapidly moving into a technology world where payments are accelerating. So I didn't see, haven't had a chance to study this, but I didn't see, for example, discussions about online purchasing and mobile, right? And mobile, because most immigrants, it turns out, are actually like young people, early adopters of technology in many ways. So we may want to think about, if it's not here, how we start thinking about that going forward. And my third point is, I agree with Max, and I was actually thinking of maybe Tim's notions that there are technologies increasingly available for interactive purposes where I think, frankly, a CFPB, a government trusted agency, could provide and be a partner maybe with some technology groups, having a really innovative way of letting people then navigate these types of questions. You could do it in the decision tree type of a way, even beginnings of some AI tools that could be used. So, but excellent, really great.
Thank you, Brian.
Thanks, Bill, and good work as always. I had a couple thoughts on how to encourage financial services providers to service the LEP community. I think, and it, Raul and Josh, I think both mentioned, encouragement, I guess, to accept other forms of ID, which of course are all allowed. A couple other thoughts too, as and based on our experience with servicing in different languages other than English. Two particular areas of compliance typically come forward when thinking about servicing in another language. And those are fair lending and UDAP. On the UDAP side, of course, you have to provide everything in a clear and accurate manner. And there's actually an amazing amount of stuff that has to be done in a second language to completely service a customer. Letters, even for a credit card, there can be hundreds of letters to translate. And then there's the way you service a customer, obviously, phone servicing, the IVR would have to be translated, eChat. If you're going to provide a complete end-to-end experience, complaints would have to be taken in a foreign language, complaint monitoring, call listening, and kind of the list goes on. And so as we've sought to provide these services and enter markets for these customers, there's quite a bit to be done to provide an end-to-end experience. I think that the Bureau has done a good job providing some informal guidance as to what that journey could look like, not requiring the complete end-to-end experience to be translated before we start servicing a community like this. I think that informal guidance is good. If that could be formalized, for other financial institutions to consume, that might help encourage innovation in this area for financial services providers. The other one to consider then is fair lending, and quite a bit of fear, or legitimate concern that language could be a proxy for a prohibited basis on fair lending, and so trying to think about how to stay compliant with fair lending while choosing some communities, some languages to serve and not others, or when it comes to translating only part of the experience and not the entirety of the experience. And again, I think there's good thinking. I think it's emerging, and just proceeding for making maybe more clearer guidance, more formal would encourage innovation. So just ask for that.
Thank you. Unfortunately, we're going to have to wind down and transition to our next item. But I saw Judith, Judge Rizzo, and Patricia, and then Jim, I'll ask you to maybe incorporate yours into your trends and theme comments. But Judith?
I promise to be very quick. I just wanted to start by saying that Max's suggestion would be wonderful for English speakers as well. I think many English speakers would love to be able to text self-amortizing mortgage and get an explanation about what it is, but that wasn't what I was going to comment on. I work with students. I'm a professor, and I think that's a population that this would be very useful for visiting students, foreign students. I, every year, do the orientation for all of the Fulbright scholars who are coming to America to teach English, and we're mandated by that program to teach them about how to rent an apartment, but not how to pay for it. And invariably, those questions come up, well, how do I open a bank account, and how to, so I think these materials would be wonderful for that population. Even though they're only here for a short time, that program is really a great ambassador program to the world, and having them have a good experience here financially would be wonderful. And all of our universities have large student populations now, and it's a real issue for them. When they're here, they do need to have access to not as much credit as their banking products. And every year I have at least one Chinese student ask me how to write a check, because that's not part of their culture. So.
Oh, I thought you were going to someone else. Hi. Great job, great comments. Boy, you really have a wealth of a treasure, really, of information on the boots running to get all this. But quickly going back to Seema's point, the court, I know I come back to it, that's my cue, is that level playing field where everything else has been exhausted. People most vulnerable and feeling, obviously, to be heard, they're going to come to the courts. What's beautiful about that is it can balance what may be thought of distrust in terms of how information comes to them. So when information is received through the court system, and particularized communities that come through a family court situation where, quote, deadbeat dads, and it's not just dads, I don't like that phrase, but where there's really thought of financial capacity to pay to keep up with payments to children and child care, or on the criminal side, victims who say have had fraud and they're dealing with the district attorney's office with all of that. And clearly in the civil sector with respect to debt collection, where things are really would be completely tethered to what action has brought them into the court system. Across the board, they could be that level playing field where these kinds of particularized insights, English and other languages, would be, I think, extremely helpful. It's that balanced foundation of being a source of information that has, hopefully, inherent trust that people would have as a takeaway. So great job and great input from everyone.
Thank you. And with that, we're going to transition to our next agenda item. But thank you, all of you, for those comments. Very insightful. And again, Irene and Dubis, important work. I encourage the CAB members to continue this conversation outside of this forum. But we'll now transition to one of my favorite parts of the work that we do of these meetings. Every meeting we take the opportunity to hear from a few CAB members who share information from their particular expertise, and we've had members talk on several topics: consumer protection, service members, old Americans, arbitration, pre-acquired account marketing, among others. Today we're going to hear from two CAB members, Patricia Duarte and Jim Van Dyke. Patricia will present on the Arizona housing market, and Jim will present on how emerging technologies are changing the landscape of the financial marketplace. Patricia has served as the president and CEO of Trellis, which is formerly Neighborhood Housing Services of Phoenix, since 2006. Her previous experience includes working as a manager of the Community Partnerships Office at J.P. Morgan Chase, and she's worked in a variety of community development organizations over the years, and I look forward to hearing from you. Patricia, the floor is yours. Thank you.
Thank you. Thank you, Bill. Now I have to figure out how to use this clicker. There we go. All right. Well, I've been introduced. I guess the first theme or trend, earlier this year, we changed our name. We were one of the first NHSs across the country in 1975. We were one of 45 approximately. And we have been Neighborhood Housing Services of Phoenix for 40 years, and this is our 40th year. And we wanted to change our name so that we didn't have a city in our name, the geography, because we service a much larger area. And we were also looking for a simple name that was a more compelling emotional story. And it was difficult to do that with Neighborhood Housing Services of Phoenix because it sounds so government, so clinical. And it really, during the recession, we learned that what we have to offer is really good for people of all incomes, especially doing so much work in foreclosure intervention. We have validated that if people would have had the opportunity, if they would have only known that there are HUD-approved counseling agencies to help them better understand their financial decisions in regards to mortgages, we would have seen a lot less people. So our name Trellis serves as a metaphor. A trellis has a function in a home, and it is a framework of support for growth. And that's exactly what we have been doing for 40 years, helping communities and helping individuals. Our tagline changed a little bit. We teach, we build, we lend. We're now learning, we're lending, we're building. We're learning all the time rather than just teaching. We're learning from our clients, we're learning from the communities, we're learning with all the changing environments. And from the very beginning, lending has been part of our DNA. And I'll go into more detail about that. And over the years, we have adapted to meet community needs. So we became a general contractor, and we now build affordable housing because we have filled gaps in the market. But one thing that has not changed is our vision and our mission. It's still the same. We hope one day to see everyone in Arizona own a home and have a place to call home. And our mission is the same, all related into neighborhood revitalization, making stable homes and communities possible through the 3 lines of business that we have. So just a quick glance of what we've been able to do in the last 40 years. We have reached over 29,000 families that we have counseled and educated primarily to become homeowners. Did a lot of counseling around foreclosure intervention during the last 7 years. But we're very proud that we have helped over 2,600 families become first-time home buyers. And every single person that has come through our office, we know are better informed around their financial decisions. So many times we see people that have never done a budget, but they will make sure to have a budget before they end a session with us. They have credit or have no credit, and so they will learn that there's going to be a customized plan created for them if they have the goal of becoming a homeowner. I said earlier, from the very beginning in 1975, we started a loan pool, $300,000. We're a chartered member under NeighborWorks America. So a contribution from NeighborWorks America and the City of Phoenix with Community Development Block Grant money, CDBG dollars. We created this loan pool to help improve neighborhoods. And that was really the work of the NHSs across the country in the early years, where we went into a neighborhood and we worked in neighborhood revitalization efforts. So evaluating the home and overseeing the construction that needed to happen is really what we did. And we also provided the financing to make that happen. And we serviced those loans. Back in the day, nobody was licensed, but we, as small as we are, have had to learn about all the new rules and the new regulations, and we follow them because we're not exempt. We are exempt in a few things like servicing, but we put on the hat as we have to do it the same way, and that's just our philosophy. So we have been able to do a lot of mortgage financing. In the early days, we did a lot of seconds to help our bank partners do first mortgages. We found out that during the recession, those seconds were not the best ones to be holding on to, but we did provide a service, but for some of those programs, people would have not been able to become homeowners. We transitioned into first mortgage lending, and we, in the mid-90s, became a mortgage bank. So we are a little bit unique. We're one of the few not-for-profits, HUD-approved counseling agencies that are also a mortgage bank, and our mortgage license is for the Arizona. Because we did our own loans, we also serviced our loans and have serviced loans for other investors. Habitat for Humanity for the longest time was one of our biggest clients. And so we, at one point, were able to service as many as 2,000 mortgages. I mentioned that we got into building. There are neighborhoods that had not seen any construction in years, blighted areas. So we got into the business of doing infill, new construction. There's a neighborhood in the Phoenix area called Garfield, and 80% of the new housing stock in this community has been built by our organization, and we're really proud of that. So during the recession, we also acquired and rehabbed about 93 single-family homes that had been foreclosed under the Neighborhood Stabilization Program. We were able to acquire rehab. Every single house has been sold to counseled and educated consumers. So as a HUD-approved counseling agency, we provide pre-purchase counseling, post-purchase counseling. For 10 years, we followed families that were living around the Sky Harbor Airport. This is a contract that we had with the City of Phoenix and the aviation. So we followed families for 5 years to make sure that they, if they chose to move, we followed them to make sure that they transitioned into their new community. But we were also involved in making sure that they understood their financial decisions. Many cases they didn't have mortgages, or they needed to borrow additional money into their new home. So that was a very long contract that we had, and we're happy to say that that's now been sunsetted. There was about 700 families or so that chose to move and that we worked with. The default counseling, our organization took the bull by the horns and chaired and was the fiscal agent for a new entity that was organized during the recession in 2007, the Arizona Foreclosure Prevention Task Force. And that was really to unite all housing counseling agencies, municipalities, and financial institutions to prepare and respond to the need. And the task force reached thousands and thousands of families throughout the state to better understand modifications and options to prevent foreclosures. We also do reverse mortgage counseling. I love to say this story because the counselor that we have, she was very against reverse mortgages. And I couldn't think of anybody else to do the counseling sessions because we're neutral. We don't say they're good, we don't say they're bad. But it's about educating the consumer, and those that want to do a reverse mortgage are required to do the counseling session. So we've been doing that for many years. The financial education component really has changed over the years. Over the last 2 years, I tell people it really went into steroids because it's not about financial education anymore. It's about changing behavior. So we have a financial coaching program called Plan Today, Own Tomorrow. And now every single counselor needs to incorporate the coaching part into their counseling sessions. I mentioned already during the recession, we were very active in foreclosure intervention. We were contracted both by Fannie Mae and Freddie Mac. We're still a Freddie Mac Borrower Help Center. And I think it covered everything else. Maricopa County is our service area. This was important for the name change because Maricopa County is the 4th largest county in the nation with about 4 million residents, and it has about 24 or plus towns and cities. Trying to do regional work is not easy, but this is the geography that we work in. Our brick and mortar programs still have been centralized into Phoenix, but our counseling, our education, and our lending programs are available countywide. Here are a few pictures of our homes. All three. The top one is a bungalow-style brand new construction, and the bottom two are historic rehabs in the Garfield neighborhood. Again, it's very important for us to concentrate the brick and mortar because funding is so scarce that in order to see impact, it's important to have it in a concentrated area. I mentioned our mortgage program has evolved over the years. I did some quick scans, and we really have evolved from being a provider of forgivable seconds, deferred seconds, to more a real lender with first mortgages and second mortgages. About 75% of the business that we have done over the years has really been soft seconds, and that is the biggest challenge that we have in our industry, that most of the times people come to us because they're looking for some type of financial assistance. And that financial assistance over the years keeps decreasing. And affordability is always a challenge. I mean, that's one of the reasons why we exist. We try to bridge gaps and make the dream of homeownership possible for a lot of folks. 77% of our home buyers are low and moderate income. During the recession, we encountered more groups of higher incomes. The foreclosure intervention hit people of all income levels, and we started to see our numbers skew higher because people needed help. The neighborhood stabilization program came about also for the recovery, and we started to see more interested home buyers, but up to 120% of area median income. So all of these things over the years have helped us to better understand that what we have to offer is very valuable if people would only know more about organizations like Trellis and HUD-approved counseling agencies. So we are a community development financial institution. We're a CDFI. That's a designation from Treasury. And that's what we use that designation for our lending programs and activities. Like I said earlier, we were licensed as a mortgage bank in 1996. Earlier this year, went through a full exam, and it was quite an experience. I had never done a bank exam before, a mortgage bank exam, but it was very helpful. And it was, I personally thought of our organization as a HUD-approved counseling agency where we primarily do counseling and education, but that's not the way the Department of Financial Institutions sees the organization. So with that, it was a really great experience. It's not just the 10 people in the lending department that are being reviewed. It's the entire organization, all 30 employees. So that was kind of fun. We're also a HUD-approved FHA secondary lender. And that's really important because when there are programs with purchase assistance, in order for FHA to accept those programs, you have to have this certification. So we've had it through that designation. We've had it for many years, but I've really seen it work since 2012 with a program called Neighborhood Lift. NeighborWorks selected NHS Phoenix, now Trellis, in 2012, and the reality is when there is purchase assistance, people buy. In 2012, we rolled Neighborhood Lift in Phoenix. In 12 months, we created 374 home buyers. Our average was 100. And last year, we were selected to deploy Neighborhood Lift in Tucson, which is south of Phoenix. And once again, to this date, we have about 270 home buyers. Down payment, closing cost assistance really makes that happen. It's been really unfortunate that over the years, purchase assistance programs have been diminishing and decreasing in amounts. And it's also very discouraging that during the time that interest rates have been so low, and generally home prices have been extremely low too in many areas, the low and moderate income people have been very far removed from being able to acquire and take advantage of these market situations. Arizona right now, and particularly Phoenix, have been declared as have been recovered already. We're back to normal. We're not seeing the kind of foreclosures and REO activity as we were, and that's great. But something didn't go very well because those that could have taken advantage of affordable housing just did not have the right programs in place to help them become homeowners. And the few programs that came our way were very small in scale compared to what was available. So the other shift, and I mentioned this already, is that during the recession, it was very difficult for us to create participation pools. We've raised capital in the past to make loans, either first or seconds. And during the recession, no financial institution even wanted to have the conversation. So what we had to do to adapt was to enter into broker agreements. So we were using other people's money. And for the first time, we are selective of what kind of mortgage products we're going to review and broker to our partners. But that is the one way that we have been active in the mortgage lending space. Last fall, we signed an agreement with a wholesale bank. And this year, for the first time, we have had access to all mortgage product types. We're different because everyone that is going to receive a mortgage through one of our brokers or through us will have counseling and education, and that really makes the difference. So we've closed about 10 loans this year with our wholesale bank, and 3 of those were FHA products that before we never even were able to do. We can do VA, and so we're really excited about this opportunity, and we're looking forward to growing this line of business because, as I mentioned, funding sources are diminishing. We have to figure out how to increase revenue to sustain the organization into the future. The rules I mentioned earlier, we got to follow the rules. We're tiny, and I would like to say that we want to be exempt from all, but that wouldn't be true. We want to do it right. We want to know that what we're doing is correct, and we know that we're mission driven, but there are rules out there, and we were not part of any of that. I mean, we're not even a ripple in the drop here, but it's important for us to better understand all the rules and how it affects our business and our consumers as well. So every single person on our team is going through licensing. We have one dedicated mortgage officer, and the rest of the team are going to be taking their tests before the end of the month so that we have a lot of different backup support should that be needed. So that's it. That's Trellis.
Thank you very much. A lot of what you described resonates with some of the experience that I have seen in our market. Since the recession for many borrowers in the home ownership space in Mississippi, the level of prime mortgages for majority borrowers has actually exceeded. It's gone past where it was before the recession. But for African Americans, it's 18% below where it was before the recession. So there's a significant gap in terms of recovery for certain segments of the population. And your point about access to supports, down payment assistance, tools that can help residents take advantage of a low-rate environment where there are properties that are available to purchase, there's a disconnect. And so the work that you're doing is very important. Really
Thank you. I forgot to mention one quick thing that I found very interesting. Out of 210 fulfilled purchases in the last 20 months, 50% have been between the ages of 20 and 34. So this data, I think millennials are willing to buy, but they are asking all the right questions. They want to know a lot more information, and we welcome that. Credit scores, 34% of those 210 fulfilled purchases have been 700 or better.
Before we go to Jim, any questions for, yes, Jean?
Patricia, thank you so much for the insights and all the important work that you're doing. I have a question. This relates to the overall market. One of the issues that we've discussed in the mortgage committee is the lending availability for low balance loans for purchasing housing that are pretty modest in price. Are you seeing any significant differences in your community? So the availability of credit for those lower balance loans compared to higher balance loans?
It is very real, not in the same way as Ohio, where they have properties that are under $50,000 mark and they need that kind of financing. We have pockets that definitely would benefit from a low cost or a low volume loan, but in negotiating modifications or in refinancing properties, when that amount comes to that level, 50 or below, it's almost impossible to find a willing financial institution to finance it. So it is a product that is needed. We have found that community development credit unions are more open to doing that kind of lending. But outside of a credit union, community development credit union, it's not happening.
All right, again, thank you very much. We're going to shift to our next presenter, Jim Van Dyke. Jim is the CEO of Javelin Strategy and Research. He is a research-based futurist on digital financial services, including emerging capabilities such as mobile, online payments, and fraud mitigation. He is a board member of Bay Area Alternative Transportation Agency, which helps individuals make an impact on climate change and personal health. He's held numerous professional roles in digital product management, market research on consumer adoption of technology, and strategy formulation. He's worked in electronic commerce since the mid-'80s, and his comments related to digital financial service strategy now reach over 40 million people each year around the globe through many public presentations and media citations. And so, Jim, we're very pleased and eager to hear from you. Thank you.
There we go. Yeah, I was going to say, ironically, I'm talking about technology. I'm better at talking about it than doing it as a researcher. So a couple of things. Since we're talking about immigration, I thought I'd bring in my own personal story to make a connection, which also relates to sort of the good and bad and lasting choices on families especially. So when my mother, the youngest of five siblings, was in the Netherlands, where she grew up very close to the German border, and in the family, all the kids became orphaned through the hardship of the Great Depression. And news traveled slowly in those times, and the Nazi tanks were coming through the main street of her town. All the siblings were scattered around, just trying to find a place to survive. And you probably heard the story. Sometimes they would survive by eating tulip bulbs, and the Nazi tanks were coming through the downtowns before they even got the news that Germany declared war, and the Dutch, being people that are better at flowers and tulips and soccer than they are defending themselves, were famously one of the first to go get mowed under. But she had two siblings, and as my last of the other surviving siblings just passed away a few days ago, and he was such a hero. At the point of a gun, he was charged with sedition because he wouldn't wear a Nazi uniform, and served in lived out the war in a concentration camp just as a kid, helping build bombs and occasionally fouling them up in the hopes that they wouldn't go off. And the other one joined the SS, and we didn't find out until after he died. He kept it a secret, and it was fascinating to see, the one who made the bad choice, even he was a good guy the rest of his life, tried very hard to make amends, and I couldn't understand why he was always grouchy, and see the lasting effect of one's choices. And I relate that. It may seem like a bit of a tough connection, but to digital can be good, digital can be bad, and choices are lasting. And I'm not religious, but my father, who was a fundamentalist minister, used to have me memorize a lot of scripture, and one was, your good and bad choices are visited upon the third and fourth generation in Exodus. So we, when we think about familial impact of financial services, particularly in harder hit communities, it's really true. And so I want to talk about digital and how that impacts people, and I think can make this advance. Great. So points I wanted to cover, which may seem like it's too high level for some and too baseline for others that live and breathe this digital and what we call fintech, financial technology, which is booming so much it has its own buzzword. And I've been in it for what's my whole career, electronic commerce and financial technology, and it's never been booming like now. So giant banks, I should have said all banks and credit unions say this is our top spend area, or certainly the fastest growing spend area. I mean, it's just off the hook right now. And banks are even acquiring these digital design firms because in our mobile device where less is more in terms of the interface and steps, banks just can't even, they're the first to admit they can't even innovate enough. And this affects the consumer's well-being because it isn't enough just to jam functionality in these devices. You really have to figure out how you eliminate more than you put in there to get the person to the desired end state so that their life is better off as a result of using the technology. And one point that we just can't emphasize enough that is unlike previous iterations of consumer-used digital finance or commerce, underserved groups, including many of the groups we've been talking about so far this morning, are more likely to be using and equipped with this advanced technology, not less likely. So what a great opportunity if we use it for good and understand how it can be used for harm by the consumer, their family, their so-called friends and family members who, yes, increasingly to your point, Sylvia, are more likely based on the data and your experience to prey on one another, sadly, because of these conditions of desperation. And so if we look at some of the data bear this out, there's this term we came up with called money hawks, which in a true research sense, the word is a segment. And those are people, simplest way to think of a money hawk is someone who is in the strongest financial condition, most likely to be used personally, advanced personal technologies, especially mobile. And so they tend to generate more profit for their providers that can get more of their business. But among that half of consumers, depending on how you measure it, who interact with their financial provider, whether that's a traditional or non-traditional financial provider, among that half, 3 in 4 are what we call emergents, meaning they're not in very strong financial condition and they're not generating much profit for their provider. So in a consumer-focused presentation, why am I bringing in providers? Because where the profit is, the services will be sustained. Only 1 in 4 are generating the highest profit, which I'll come back to on what I believe the implications are. So when we look at this chart, I won't go over all the data, but this, if you just look at the faces and the gender and the age group suggested by the kind of the memes or the icons on top, what it's really intended to show there is that increasingly, meaning at a more rapid rate, our old stereotypes of who uses or benefits from digital technology don't hold up. And so we, as a board and working with the CFPB, it behooves us to always remember that we just need to go back to data. I think the CFPB has done a much stronger job than other agencies focused on financial services well-being, frankly, and that they don't rely primarily on banker interviews. Bank input is vital, but they primarily go to the end user, so that's great. We need to continue to do that. But in mobile first, only 36% of those users are likely to be more likely to be male, and Caucasians don't make up as great of a number as we saw leading in the online realm, for example, and similar surprises in income and so forth. So I have 3 main points because your time is limited that I really want to drive home. Here they are, and rather than read them all off, I'll just go through and repeat them as I go through. So the first one is, as I mentioned, digital finance and increasingly, especially mobile, can both help and harm the consumer. Those bad choices or good choices really play out, and especially on a familial or close circle basis with harder hit groups who don't understand the customs or the norms, as folks have talked about. So we must, it's upon us to consider both scenarios. And we're not really doing anybody any favors if we say, I just want to consider the worst. Let's just talk about the worst that can happen. No, I think it's on each of us to say, what's the best that can happen and what's the worst? Because, so this movie, if there was a financial regulator's favorite movie, let's admit it, it would be It's a Wonderful Life. I go all John Boehner when this movie plays, and I'm so lame. My wife just walks out of the room, cry. But The little thing, that little girl saying, Daddy, when every time a bell rings, an angel gets its wings, and Jimmy Stewart and Mrs. Jimmy Stewart, everybody's smiling. That's the one alternative ending. And, they beat the evil Mr. Potter. And then there's this other alternative ending that we saw, right? Not so good. And it's a win versus lose in these financial tools. So, this image that I took with permission from Electronic Frontier Foundation, EFF, that, they show it in a different way, which looks a little more fintechy. All these bells and whistles and capabilities, some of which we have people on the board that are in the business of providing some great things. And this issue of understanding what is the good, what is the bad, and where is the sustainable power, and then therefore what should policy be, gets to be particularly important. So I tried to come up with a list, and it was really, by the way, I wanted to mention one thing before I get into this. Let me just back up. Matt, perhaps with your help, I'll get this back to the group to put together some of these excellent materials. And Bill, I appreciate your suggestion. I put my comments in this presentation. So there's so many opportunities. Use great data-driven findings, and we looked at this one leaflet, for example, that talked about selecting financial services and products. Did a great job of talking about what I created long ago when we took over this big ID fraud study, the big annual one. We took it over from the Federal Trade Commission in 2005 at Javelin. Survey 5,000 nationally representative people, even people who don't have a normal online connection in their home. So it's truly nationally representative. And one stat that we find holds true in a realm of ID fraud where so much changes every year, and you can't rely on, if you rely on the way the bad people are perpetrating or the good people are allowing fraud to happen based on what went on 2 years ago, which is where a lot of well-intended data from a lot of other government agencies, it often comes out about ID fraud 2 years after the fact. That does more harm than good because criminals are changing faster than that. One stat that's important of many is that among all ID fraud cases, whether it's new account fraud, existing account melded together, 1/3 of all those fraud cases were first detected by the consumer, not a provider. And how did the consumer find out about it? Through monitoring their accounts, and increasingly based on underserved audiences through a mobile device. Might be by reviewing a credit report, so you can just guess how latent some of that data is. So if that's true, then we could benefit by taking some of the excellent work in this document that talked about preventing fraud and perhaps applying a little more information to detection of fraud, which wasn't mentioned, as well as the resolution, which is vital for harder hit segments that you described, Sylvia, where resolution gets to be really messy and elongated. And the faster the consumer detects fraud, the lower the fraud impact to consumer as well as provider. So that you can predict the average financial impact and amount of hours required to remedy situations. So if we look through, this by no means is an exhaustive list. It's really just some thoughts to get the creative juices flowing about ways that fintech or digital financial services used by the consumer, how does it impact the consumer's health? There's so many different areas, and it can be good or bad. And a lot of whether or not it is good or bad is determined by policy, as well as the capabilities provided by the financial services institution or important third parties. So, there's shopping, which can be great for getting the best price. And there are also shopping offers that are put out there by scammers, work from home scams, bogus merchants, and along the way, people don't protect data properly, and you get data breaches. But in that, people are also locking up or better securing their data, or when fraud happens, those consumers are the first to detect it in some cases, again, 33%, and they are made whole more quickly. When we look at things like monitoring of fees, and I think there's some great things going on at this early stage in the consumer complaint database, and I'm excited about seeing where that can take us and better helping people to make the best choice of providers. But people make what looks like in the outside bizarre choices. I mean, people who will never intend to go into a branch consider where the branch is when choosing a bank, their next bank. So people are confused. They're not stupid. They don't intend to do something that looks like it doesn't make sense. But in a digital realm, they're really they're struggling. There is, in digital's back-end impact, robo-signing, analytic redlining. There are also people getting lots of help, like a lot of those people on the CAB, to help them make good choices. You know, it's interesting to consider this word regulation, which necessarily implies constraining or limiting, kind of throttling back. And generally that's what, let's be honest, that's what regulation often does. But I think it's important as we consider the best policy decisions that make the consumer whole, that there's two precedents that always pop in my mind as a CAB member of where policy has actually created more commerce, resulting in more profit, but for the purpose of what we're talking about today, made consumers in a better position. One was a part of the FCRA that allowed consumers, based on its admitted state, to have access to their credit report. Well, that was in the FCRA, and until that, consumers didn't have. Now, the industry quickly jumped on that and said, let's charge people for credit reports. And there was some back and forth work, and the CFPB was involved in that early. The point is, people wouldn't have had access to that if they didn't, if it wasn't for FCRA. And people being able to deposit their checks digitally, which has taken the industry by storm, and it's great for consumers, great for small businesses, it's great for banks. So it's sustainable financially. Well, that really would not be anywhere near where it is had that not been for the Check 21 Act. So policy created growth, which was great for people and great for business. I mean, so it can be a win-win. I'm sorry I don't have a third example, but maybe that's what we need to try to find. And, you know, so there's lots of other examples out there that and we currently have, you could say, in the U.S., where we typically take a very hands-off view of fintech as compared to other advanced economies. One might argue that when we look at this whole chip card debacle going on right now, it's hard to say many good things about the U.S. situation and consumer confusion. And we've taken a very hands-off approach to saying, industry, you figure it out. Might be worth reconsidering from my perspective. Second point, fintech invites more than traditional financial institutions. If it wasn't for fintech, that would not be the case so much. So policy must cast a wide net. So, you know, banks and credit unions have enjoyed this private ocean or lagoon where, you know, it's basically custodial regulated providers. And because of digital, you have more players like the likes of Amazon, Apple, Facebook, Google, and PayPal. I might even say when you look at this recent policy action on the part of the CFPB, on the part of Sprint, you know, it really factored into some of that where you had a provider, again, my language as a board member, where you had someone who was authorized to take funds out of the consumer's account. And that was fairly, in my view, a bit bank-like. And if it wasn't for digital, you wouldn't have as much of that. But so why does that matter to consumer well-being? And this was kind of funny. It shows you a lot about consumer segments because I asked one of our older researchers, not much older than me, you know, for his take on my slides, say, did I leave anything off? And he looked at this slide and said, Jim, why did you say mobile wallets? Meaning is defined by saying the consumer pulling out their mobile device to go into mass transit, to hail a Uber or Lyft, buy a coffee at Starbucks, whatever. And the consumer uses their mobile device, never pulls out their traditional wallet or purse. So I said, they're blowing up. And he said, why would you say mobile wallets are being destroyed? And I said, you know, to this individual, you know, okay, there's a generational difference here. Well, our young researcher created this, and that in younger generation language, that means growing, and older generation language, that means shrinking back. So, you know, we need to really be sensitive, especially in digital, of who we're talking to and how they interpret it. But they are growing rapidly, and that's a javelin. Those numbers were actuals in the past in our time series forecast with analytic-driven projections for the future. And it could, you know, the only thing we know about something when you project the future is you're going to be wrong. You don't know whether by high or low. So in this what we call a Javelin Gang of 5, which are these 5 companies in dark blue. So Facebook, Google, Apple, Amazon, and PayPal. This is based on us going out to about 5,000 people, a different survey than the fraud survey. We do a whole bunch of these. And saying, tell us how you feel about each of those brands listed. Hopefully everybody in the audience could see these. So there's a number of banks. We just chose like kind of a short list of nationwide banks and telcos and interesting West Coast / Silicon Valley firms. And what we find is that these gang of 5, as we call them, because we see that we ask them, say, how do you feel about these 5 brands? And tell us how you feel about all these other brands when you think about who you would want to use to be your mobile payment provider, your mobile wallet provider. if you started using your phone to make a payment in the future. And then we judge how those bubbles, how those intersections, the size of the bubble represents trust, by the way. Big bubble, you trust them more. Small bubble, like in the case of, I'm not picking on Sprint here, they just happen to be in the lower left. So, that the least, telcos are in a tough way today. So when we look at all these brands on there, one thing we see is the Silicon Valley-ish and West Coast brands keep moving to the right, and telcos and financial brands keep moving to the lower left. And, us as researchers trying to predict who's going to win the mobile wallet wars and how will that affect consumer well-being, say, wow, that doesn't hold a lot of good things for the traditional providers. And we need to think that in terms of our policy that shapes who's able to provide services for who. There's a lot of other things in this. Let's see, that other slide, by the way, in consumer health, and one other one I wanted to call out that we're just scratching the surface on. I called it CDCs for lack of we just created an acronym because we didn't see a good one out there. It's where the consumer, or maybe even the small business holder, can go into their payment account, whether it's a prepaid, credit, debit, deposit, loan, whatever, and say in advance, I'm going to tell my provider, I never expect to buy from these category merchants. So if somebody else is trying to do it, it's probably not me, and please throw up some big convenience barriers to authenticate my identity, and I'll live through that. The problem with those CDCs, as we call them, is almost nobody provides them. And I think there's great opportunity for everybody to win in those, but it might be a platform play that has to span the industry. Again, another chicken versus the egg kind of a problem. So last of my 3 points is if fintech continues to shift consumer profits to increasing the big banks, I'll show you some evidence that could be happening, we should prepare for a more rapid exodus of smaller regulated financial and alternative financial and payment providers than our model currently holds. And if that is true, then what would be the implication to consumer well-being? So I'm particularly concerned about that and kind of interrogating the data on that. So one thing, it was 2014 that mobile overtook the branch in the U.S. as the most predominant way people interact with their financial provider. I mean, it's old news. And that's just looking at primary banks in the traditional sense, not alternative providers where it would be more profound. It's even more true that with Gen Y, so generational trends being what they are, that will accelerate that factor. Millennials are more likely to turn to non-traditional providers when they perceive that their bank or credit union is slow to act. And one thing that's also very interesting, those of you that have been in fintech for a while or this space, you might remember because it was said so much at so many of these booming conferences and research papers and all that, that boy, the one big payback for financial services institutions in digital is loyalty. A digital customer is a loyal customer. And guess what? Today, the opposite is true, but the industry isn't really talking about it too much. And I think in some cases, they're aware of it. Some cases, their data doesn't yet show it. What we see from the consumer is they both are leaving the digital first customer is both stating a higher likelihood of leaving their financial provider if anything isn't to their liking, and they actually are citing more likely to leave their financial provider at a higher rate, in total opposite of a few years back. So this slide here is some really interesting evidence. Again, our data, I think we went out to 9,000 consumers on this, and there's a lot going on. So let me just boil this down to the salient points. Shows 4 segments in the research sense of the word. So they're not looking at age or gender or income exclusively, but rather these labels underneath each of the 4 stacked bars. The one on the left with a big red oval behind it, Money Hawks, these are people who are both strongest in financial condition, wealth, income, whatever. They are using digital to make the best financial choices. And because of that, they generally generate the highest profit for whoever their financial providers are. So there should be some systemic sustainability to that condition. And what we find, it's really shocking to us, and it survey after survey that we do twice a year with these big samples, show that, you look at these numbers, like say in the very lower left rectangle, that 34% of all U.S. people who have an online connection, they're at Bank of America. Now, obviously, Bank of America doesn't have 34% of all U.S. consumers. So B of A and then 14%, the disproportionate sense at Chase, these big banks are doing a fantastic job of deploying digital in a way that causes the most well-heeled consumers to flock to them. I mean, they're doing it through high-value services. They're not, there's nothing underhanded about the way they're doing it. To a lesser degree, this is going on at the rest of the giant banks. Now, these emergents are people who are also digital forward, digital first, but they're mentioned an early slide, of all the mobile first consumers, 3 and 4 are not so profitable, 1 and 4 are highly profitable. Who's getting the consumers that you have to spend a ton of money for as a bank, but getting a very low return on? It's, as the data show, regional banks and especially community banks. So when I look at that data, I think, boy, digital in the way it's being deployed, this is from the free choice of these institutions by category, it actually kind of scares me. And you get this vicious cycle between the fintech vendors that exclusively focus on small financial services institutions. I used to work for one as a product manager, and every institution gives you like a 2-inch thick RFP for the latest digital and it's a vicious circle that scares me. So why is that a concern? Well, as you look at how giants reap these high profit digital customers, I worry about in the US, where we lead the world in having the highest ratio, and this is not necessarily a good thing for consumers in all cases, this oddly high ratio of number of banks or credit unions per consumer, these small institutions that are the fabric of many rural communities and serving farmers and other places like that, the data say they may not be around because they can't provide the service and the competitive pricing and the fee levels and the breadth and all these other things. So maybe there's a better way that's needed. So I covered a whole lot of ground in trying to pack it in, and at the worry that I might be either too high level for people who live and breathe this and cover a whole lot of acronyms and stuff for others who don't live it. So I please apologize if I didn't hit quite the right level, but if there's time, I'd love to take any questions.
Oh, great. Thank you very much. Open for questions and comments. Yes, Ellen?
So, Jim, this is all very scary. And it's particularly scary in light of the comments that several people, Josh and Patricia in particular, have made earlier and also were made yesterday about how the only people we can get to work with our people, the only place we can get the kind of attention that our communities need is community development credit unions or CDFIs or whatever. And I think that probably also includes some community banks, maybe not all. And so it does really create the question about, and I don't know the answer to this, CRA properly enforced probably is some of it, but not all, about both how we encourage the large banks to support these other financial institutions that are able to reach populations that, for one reason or another, the large banks, I'm going to use the word can't, but don't want to is in there too, reach, and how we get them out there actually doing the financial services work in more communities, including some communities that they've moved out of following the recession, and create and actually do their share of the work, and not get into a situation where the only people who can do something are community development credit unions, who I love, but I got to tell you there aren't very many of them, and they don't have enormous reach. So I think this really focuses attention on the big banks in two ways, namely, who are you serving and how? And secondly, in situations where, for reasons related to scale, for reasons related to depth of hand-holding, for reasons related to cultural affinity, it's really hard for you to do that work. How are you supporting the folks who can?
Yeah. So what Jim was interesting about your research was that we have done some research that would suggest, and I guess to reinforce some of the points, that the number one reason to choose a bank 3 years ago would have been the location of the branch. And the number one reason today is my money safe and secure? And then the location of the branch is kind of come down to 3. What I think is also kind of interesting to me is that the connection between the dynamic nature for financial education now, given the fact that it is as much about protecting money as it is about how to use it, and how do we then begin to think about how dynamic that's going to have to be to keep up with the ever-changing, landscape, particularly as a product now is essentially the device. So, this phone is your checking account now, and customers don't really understand that there is a checking account behind the phone. So it gets pretty confusing. Ellen, to your point about CRA, it's something that as a banker, I actually share your concern. I do think, though, that the Community Reinvestment Act, particularly around access to financial services and the service test, it's 40 years old, and it's also much more location sensitive, branch sensitive, physical face-to-face service sensitive than it is fintech service. It's something that we've opened some discussions with the OCC about, but I do think that one of the biggest solutions is how do we bring fintech into the CRA world, and what does that mean in terms of kind of refreshing a view of what the next generation of serving the community might look like.
Bill, can I just have a sec? I totally agree. I think one of the things that is so important about the kind of work that Jim has put up is it tells us what is likely to happen if we don't do some reform on CRA, and that the status quo on that regulation, which the CFPB is not responsible for, I will say, is not going to serve the population of this country well in the long run.
I really find this really fascinating, Jim, because I come at this from a decade of experience around the world where you're seeing mobile adoption, mobile banking taking off. We were talking about Kenya earlier and M-Pesa. You have around the world much more rapid mobile adoption with many more services. I'm talking to private equity companies here who are almost giving up on the United States as their primary source for where to invest in terms of mobile, because there's so much more opportunity and growth occurring in Africa, India, China, and to a certain extent Brazil. So I think there is this question back to, what do we do from a regulatory perspective to actually get this revolution going inside the U.S.? I don't think, and I have a Bank of America right here next to my Citi ID debit card, but I don't see that type of action going down from the big banks, and definitely the small financial institutions, the community development credit unions, etc., are not adopting this type of technology because it's extremely expensive, to do. So we do have a very serious problem, and I'm concerned that we're going to have a growing digital gap to a certain degree, because and also I think we can agree that a lot of the Silicon Valley company, the type of customers that I think I'm concerned with, which is the low access customers, are not the primary objective here. Now, I mean, how does that work? I mean, is it a CRA thing? I don't know if actually a CRA requirement. It would be sort of interesting, you know. Then we have to start recounting how CRA points are added up. That's an interesting thing, and technology, you know, is part of it. But I mean, I'm already envisioning maybe a seminar that CFPB, a series of them, could be organizing in the tech world with the banking and with the lack of access specifically on this issue, because we are, and I know you have some global data, but we are falling behind. It's curious, you know. It's a very strange outcome, having been the innovators in many ways of a lot of this work. We're not seeing its impact here.
Joanne.
Thank you, Jim. Thank you. It was very interesting. Raul, to follow up on what you're saying, I think that part of it is that we also have somewhat of a regulatory regime regarding cell phones, and that's the Telephone Communication Protection Act, which right now is in a complete state of flux. So while I've said this before, we are encouraging consumers to use their phone for all sorts of reasons: access to banking, cable, you know, I want to call my cable company, tell them what time to come. We now have this TCPA, which there was a declaratory order issued in July, which has created an incredible amount of confusion as to when we can access consumers and how do we drive consumers, how do we put the, I think that the intent of the TCPA was really to put the control of the communication with the consumer, and that's fine, but there's limitations to that, and especially that can be very detrimental in trying to expand this whole process to more people, especially lower income people. So I think we have to think about that in this discussion with FinTech, and how does that regulatory, you know, how does that order, which is currently being challenged, but how do we fix that to incorporate with what we ultimately want to do with cell phones? Thank you.
Thank you. Gene?
Yeah, Jim, thanks for the presentation. And yeah, I'm intrigued to know if you have found any specific evidence of how this actually, how these changes translate into specific consumer financial benefits. So presumably the wealthier clients are going to get access to some broader range of services. But I see a potential sort of fair lending implication here is if the people who migrate into these channels or services at the big banks, you know, wind up getting a whole bunch of other advantages, then the question is, okay, so how do we get more people into that channel? Is it possible? And how can we reduce the barriers for them to access, you know, those channels? And or, you know, again, getting back to the whole CRA issue, you know, can you encourage, put more pressure on the banks to make sure that those advantages are available more broadly to people who are their customers and people who might not be their customers currently. So.
Yeah, I thought it was a great presentation. Had a few perspectives here. I think you're absolutely right. In technology, there is a virtuous cycle for the technology leader in terms of being able to reinvest more and more into whatever technology is really a better solution for the consumer. So arguably in the case of the bigger banks with the larger budgets around investing in mobile apps, they will continue to widen the gap over time, maybe much the way Google widened their gap in search quality over time. And I do agree with the conclusion that subscale financial institutions will close rapidly as this happens for both compliance cost-driven reasons as well as technology-driven reasons. I do think that it's a double-edged sword. Consumers, we're seeing the behavior on NerdWallet where consumers are disproportionately flocking to what is, in my opinion, objectively the best products. There's often structural advantages that allow one financial institution to offer the best product. It may be in the case of a personal loan, they're set up such that they just have much lower costs than traditional institutions who are dealing with depository compliance costs, and therefore they can originate and and service personal loans at a much lower rate. You see that in terms of marketing scale for some even rewards cards vendors who are able to invest much more in marketing and have a stronger seat at the table when negotiating interchange agreements. And so I do think it is a double-edged sword for the consumer where certain institutions will continue to gain further advantages within certain types of products. But at the same time, maybe if we think about the role of credit unions and community banks in helping local and disadvantaged communities, maybe technology can benefit them in certain ways too. Because if you deconstruct some of the benefits there, some of it may be access related, some of it may be advice related. Technology can serve the same purpose where, let's say, something like IBM Watson that can provide great advice on getting a home in certain areas could be widely proliferated and reinvested in, or some really innovative credit access products could get better and better targeted for certain communities.
I'm going to pass. Somebody just made the point I was going to make.
As one of those dinosaurs that you alluded to, who runs a credit union, not just a credit union, but one that focuses on economically underserved people and places, it's a very sobering presentation, but I lean toward Tim's comments in that I think that it can be an equalizer as well for some institutions who are actually intentional about working with those markets that are not seen as a priority for traditional banks. We have seen significant growth in our membership in outside of where we have a physical branch using mobile technology, PFS, other tools. It is such a rapidly changing world. However, it's difficult for a small financial institution without the B of A resources. It's hard for B of A to keep up with it. It's incredibly hard for smaller institutions like mine to keep up with it. But it is a important aspect of our strategy to reach people outside of where we can have a physical branch. And so I look forward to learning from you and Tim and others as we continue to navigate these challenges and opportunities. I think we will now transition to lunch. We will adjourn until 2 o'clock, and then we'll reconvene and continue with the CAB meeting. Thank you all.